Hey everyone, how's it going? Happy Tuesday. Um, so good day trading today. Unfortunately, I didn't so I was in a Discord call with friends when I was trading and I didn't really do the live commentary that I wanted to. It's kind of like half talking about what I was doing, half talking to friends. Um so I'm just gonna talk over the recording that I have here and kind of talk about some of the things that I learned and path forward. This, trading day was a profitable day, but there was kind of a key mistake that I made. And then also I want to kind of talk about trade the pool and some of the limitations because although it is a great software to use, there are some limitations to it that we'll talk about. So first things first, um, trying to take a trade in the first minute of pre-market isn't gonna work, especially with the kind of size that I want. So even though that there may be volume within that time period, a lot of the times I can't get my order in just because the lack of volume in the previous candle. And the previous candle will be basically nothing because it's basically the little amount of volume right before the market closes or whatever. So I can't put in the orders for the size that I want. So if you're trading a live account, that's something that just doesn't really happen. Um, it's fully, the size that you take is fully dependent on what liquidity is existing at that time, like point in time. So on Ugrow, I was really looking at 8.2 and above, and it never really got there. It hit 8.15, and I tried to get that order in, but it never really came in. And during the rest of the video, I'm basically like scanning, looking for another trade, using Webull, refreshing the top gainers, looking for a trade. And just a little bit of background on my like overall workflow. Basically, what I'll do is pull up the top gainers. You see here, Ugrow is popping again, so I'm getting ready for entering into a position after we saw the reject of 8.2 and looking at the time and sales and also level 2. You can see it's a little laggy. So right here, I'm trying to enter for 100 shares, but it keeps getting rejected. And that's just because of, previous candle volume. So I end up trying to put in an order for 25 shares and then it just doesn't fill and retraces. So it's getting pretty annoyed at this point, but that's okay. I leave my order there in anticipation. Well, looks like I just canceled it, but um, I feel like typically I would leave my order there looking back, just to see if it spikes up quickly. I think at this time I was also looking at other stuff and I was like, okay, I'll play the break of 8-2 um, if it gets there. But yeah, trade the pool is good. I think overall, like I think the rules are set up in a way that are good. And the thing I like the most is not having to locate shares. Um, the annoying part is then you don't really get filled how you should, like in a live trading environment. You can't really put orders on the bid and get filled. The only situation where you get filled is if price moves to the ask, meaning if I'm short and you're looking at level 2, if if the bid price is equal to the limit price that you're short at, you will get filled. But if the ask is equal to it, or if the last orders are equal to it, you won't. So it's crucial that the bid gets up to that price that you want to fill at in order for you to get filled. So that's super annoying because that's not how real trading works. It should be dependent on time and sales. if there's orders coming in at a price on time and sales and you're entering at that price and time and sales is like hitting that price, you should get filled. But they're kind of, I think this is a way for them to capitalize on spreads and preventing traders from spread trading essentially. So I pull up Muse here and notice the spread. It's 10 to 15 on the top left there, that market depth. I'm gonna come back to Muse, but ended up looking at Pavs. Um, Not a lot of room again, so that 10-cent rule for trade the pool is obviously a limitation. And if I'm playing down to the level of 0.48, I need the price to get up to like 0.58 in order for me to take that trade. So at this point, I'm just going through looking at, different tickers that I'm seeing on Webull. And back to my workflow, I look at it from Webull to Thinkorswim, which I use for charting, and then to here, which I use for trading, trade the pool. Um, so I'm looking at Muse because it's spiking, right? But again, the market depth you'll see is like super wide on the spread, and you'll see how the bid starts stepping up. So I'm interested in this, but I'm not seeing, like, I'm not realizing the spread situation. So as this is like going up, I'm like getting ready to take the trade, but you'll see where the spread is at now. So the bid is at 13.7 and the ask is at 15. So this is really bad because if that bid just steps up to 14, we're screwed. So I realized that at this point, but not seeing any orders on Trade the Pool that um, indicate that it will work against me. I was like, whatever. And I didn't want to close because if I close, I'm closing at the ask. I'm closing at 15. Um, so at this point, I was like, shoot, this is a really bad trade. That being said, I can't really get out of it, so I'm just gonna wait and see what happens. And I was expecting a crash kind of to where this started spiking up, which was that 1150 kind of area. So I have to play the waiting game here, and I don't like it because if you look at the ask, it's 15 and then 17. So not a whole lot of volume here, not a good trade. And thinking about this trade today, I was like, I really got rewarded, and you'll see later in the video, this trade did end up working out, but I got rewarded for a trade that just wasn't good at all, and I shouldn't have taken in the first place, but I was just antsy because of what I saw with you grow. So, and that is a really bad habit of mine is I'll lose patience when I see something spike up and I don't get filled. And so I go back to Ugrow as I see it coming back up and I'm getting ready to take shares. Again, 100 shares don't get filled because um, there's a rule where I think it's 3%. If the prior 1 minute volume, um, you can't exceed the prior 1 minute volume by more than 3%. Um, so yeah, so I'm in Ugrow and then I'm also like trying to look at MUZE, Muse, um, since I'm like trying to manage both positions. Both of them are in the green. You can see in the positions right here. But I really don't want to be in Muse and I want it to be in Ugrow for more size. And now I'm just managing two positions, which I'm just not prepared for. Um, but again, really good short on Ugrow. Like I played that pretty well. You could see I basically top ticked it. Um, but here I'm kind of just like, okay, MUZE, do I get out and just play Ugrow? Being in two positions is much harder to manage. Another thing that I've talked about in my other videos is when you open two positions, you aren't diversifying your risk. And I think about the the concept of sports betting a lot with this. Let's say you are risking 2% of your account on one trade. As soon as you open another trade, you are now risking 4% of your account. And unless you're a wizard or have developed a system to identify if they're correlated, you don't know if those trades are going to be uncorrelated or correlated, especially if both of them are being traded on NASDAQ. What if you didn't look at NASDAQ and it's gapped up like 2% or something, and you're short in two NASDAQ tickers that are probably highly correlated? Or let's say both of them are in the energy sector and there's big energy news. So you're multiplying your risk by spreading it across two tickers, unless those two tickers are completely uncorrelated. Um, so that's like something to keep in mind. It looks like I missed it when I was walking around my apartment, but you saw that Muse ended up hitting take profit. That was pure luck, and that shouldn't have happened. That amount shouldn't have counted. And then at this point, I'm just waiting for Ugrow. Again, I would have liked 100 shares on Ugrow, but because of the limitation, you can't trade more than 3% of the prior 1 minute candle in your entry. I couldn't get that size I wanted. So again, limitations of using trade the pool versus using your own capital. That being said, though, no locate fees. Um, and obviously this is a simulated account, so there isn't those, partial fills, for example. You get filled for the full amount. So two winning trades there, one of which was kind of a scratch. But that being said, if you look at my projected balance, it's at 273. I'm going to go ahead and pause here and pull up the trade the pool. So two scratch trades, right? Or one scratch trade, sorry, and one that counted. But my account balance was at 273. So there were many other scratch trades that worked out in my favor. Not necessarily scratch trades, but ones that didn't meet the criteria that are highlighted in red here. Like this $40 win being from 4.6 to 4.0, because this wasn't 10 cents, it doesn't count. Same with like some of these smaller ones, but like these ones when I was like learning how to use the software didn't count. Um, but anyways, we had this $31 win with MUZE. Super lucky, by the way. And later on, MUZE did spike pretty crazily. So it would have been a good re-entry if that bid ask had tightened, but I don't think it did when I saw it spike up again. But Ugrow was really the good trade, and I was really patient with it. So I'm proud about this one. I just wish I could have had more size. If I had 100 shares, it would have been like a $45 win. Regardless, 195, we are closer than ever to our target. I'm glad I'm meeting my goals for this week. I'm hoping, fingers crossed, I could stay locked in and really look at every piece of information before entering a trade. Going back to workflow, I talked about what I look at, right? I look at Webull, then Thinkorswim, then um, trade the pool. But there's a lot more information to look at. On Webull, I'm looking at the 1 minute chart and seeing if it's spiking and seeing if there's room for it to go down 10 cents relative to trade the pool's rules, right? And checking for volume, checking for volatility in the price. I want to see the price moving and I want to see volume with it. And then I pull up Thinkorswim to see if it's reaching my overextension indicators. So, mean price is far, or current price is far from mean price. And I'm looking at news. So I want to see that there's no news on this stock. And then I also have the 1 year chart to see that it's in an overall downtrend. Um, then when I pull up Trade the Pool and get ready to enter, I'm looking at on my Thinkorswim chart, I have the number of shares I can take where I'm risking 1 ATR and risking $50. So I'm basically gearing up that trade to be able to take that amount of size and just waiting for price to kind of break whatever prior resistance there is and then I take my short. So yeah, whether it's like the prior candle high that I'm looking to get broken above, or the previous day high, I want it to be up at least 25% and then shorting into that criteria. So that's my strategy. I'm basically telling you guys my strategy. But it's very hard to implement in practice and look at all that information at once, and it might not work for people. I will say like the having pre-market stops is really important because you'll have times where it just spikes and then you're in an immediate drawdown and you can't get out of it. And if you make a mistake like being an MUZE and say you time it wrong and it goes up, MUZE this day went up to $20 a share. So if I'm in at 13.20, it just goes to $20 a share. I'm immediately down whatever that difference is. And it's really dangerous um, and I've been caught in really bad positions as a result. So pre-market stops are important, and I'm working to see if I could find any broker that supports it. And if I do, great. If I don't, that's okay. I'll probably continue using Trade the Pool or work on an algorithm that can do it. But that's kind of the big risk with this form of trading is you don't know how far up a spike's going to go. So yeah, trade at your own risk. Obviously, not financial advice. That's my strategy. I don't recommend for people to trade my strategy. I think it's very, very high risk. But if you can manage it, it can be very lucrative. Obviously, there's a high win rate, about 73% on my trades with a 1 to close to 1 to 1. I'm aiming for 1 to 1. Um, but yeah, we have a positive expectancy. So you want to extract that from the market. So another thing to keep in mind, right? This expectancy. Now, if you have locate fees, that deducts from here. And then if you have taxes, that deducts from here. So after, all things considered, are you still outperforming the market? So that's kind of the levels to this. Like you see I'm plus 195, but that's just because of Trade the Pool's rules. Like I'm not paying taxes on this. I'm not um, paying locate fees. I'm not paying commission fees. I mean, I guess I am paying commission fees, but still. Um, so yeah, that's it for today's video. Hope you enjoyed. Leave a like, comment. If you have any questions, happy to answer them. And peace.